Financial independence, retire early, or FIRE, is a trend that we at this channel really support. Passive income is the most efficient strategy to retire early and comfortably. There are other approaches to this, such as purchasing a house and leasing it, launching a side gig, and so forth. However, since we're huge investors, that's what we'll be concentrating on today. Investing in growth stocks in the stock market is one of the finest strategies to maintain a passive income stream. We already know the maths. A $1,000 investment in Tesla in 2011 would be worth $148,405.95 today. This begs the question of how much stock in a growth company like Tesla you need to own in order to be able to retire in 2031, as well as how to go about saving and investing. To find out, keep watching. A group of individuals known as FIRE, Financial Independence Retire Early, are dedicated to a program of extreme saving and investment in order to retire far earlier than would be possible with most budgets and retirement plans. Inspired by Vicky Robin and Joe Dominguez's best-selling book, Your Money or Your Life, which advocates analyzing every expense in terms of the number of hours work necessary to pay for it, FIRE was born. People no longer choose to spend their lives working long hours at a job since the world is changing. What then is the remedy? Nobody can have a safe retirement without contributing to their pension accounts. Supporters of FIRE invest a larger portion of their income than the average individual does. But the idea of setting aside a certain portion of your pay every month for investments, and doing so as soon as possible, can help you build up your retirement funds to the point where they can secure your future financially. Providing a response to the question, how much do I need to invest to retire, is crucial to retirement planning. To be able to retire, how many Tesla shares will you need to own? The answer is different for everyone and primarily depends on your desired retirement lifestyle and present income. It will be easier for you to stay on track and reach your retirement goals if you know how much money you'll need to save by age. You must include in taxes monthly expenses, your current wage in relation to stock values, and other factors in order to determine the figures. The truth is that your retirement savings target will be very different from your siblings, neighbors, and even coworkers, despite the temptation to provide a general amount. This is due to the fact that several important personal traits, particularly lifestyle decisions, will dictate the amount you'll need. The majority of specialists advise that your retirement income should equal approximately 80% of your yearly pre-retirement wage. In other words, if your annual income is $100,000 before retirement, you will require an additional $80,000 annually to live comfortably after retirement. Other factors like inflation and the depreciation of the equities you invest in are not yet taken into account. According to the 4% recommendation, experts normally advise saving 25 times your yearly costs before retiring. Therefore, you would need $1.25 million to save for an annual expense of $50,000. You would need $2.5 million to save $2.5 million for $100,000 in spending. Online retirement calculators can help you estimate how long it will take to save 25 times annual spending. If you were to save 20% and assume that your portfolio would have an after-inflation rate of return of 5 or 7%, it would take about 37 years. It would take 31 years if you saved 25%. You would need to increase that percentage of savings and invest the majority of it in Tesla equities if you wanted to retire by 2031. Remember to account for inflation and the impact it will have on your finances. For instance, the highest inflation rates in decades occurred in 2021 when it surpassed 6% on its own. Even though this is much more than the national average, you should account for 2% every year in inflation. This is the point at which compound interest and investing become relevant. A surge of early retirements brought on by COVID-19 over the last 2 years is projected to have caused 3 million more senior citizens to leave the employment than would have otherwise occurred. Some of those exits were probably motivated by fear of layoffs. Others, however, were thrilled to be retiring as the value of their homes and assets had increased dramatically. The allure of investing lies in the fact that inflation is not a major concern. Growth stocks such as Tesla have, if anything, demonstrated that they will do very well in the years to come. After a prolonged period of fall, the stock appears to have stabilized, with a 7% increase in price since February 28. Even though Tesla is only 20 years old, it leads the market, is laying the groundwork for a more sustainable future. It has drawn a lot of interested parties who are ready to invest in its shares in the hopes of making a fortune. Despite its great potential, it may not be a wise investment for everyone. One important thing to think about is portfolio diversification. As we have stated, You run the danger of losing a significant amount of money if you make excessive investments in a single company or industry. This is especially risky if your life savings are involved. The amount you can invest will also be restricted by the price of Tesla shares. A single share was trading for over $870 at the time this video was made, which can be problematic for those who just had a few $100s to invest. Fractional shares are a more affordable choice for those who are unable to buy an entire share. When choosing where to invest your money, bear in mind that not all brokers let you purchase fractional shares of Tesla stock. The company's future is another thing to think about. According to experts, while yield growth and value fundamentals can eventually make you wealthy, safety and quality guarantee that you'll stay affluent. The 2017 study, Do Stocks Outperform Treasury Bills?, found that stocks do better than Treasury bills. Over time, 52% of all stocks experience a loss. According to Hendrik Bessenbender of Arizona State University's W.P. Carey School of Business, around 12% of the over 26,000 companies that were examined in this study from 1926 to 2016 filed for bankruptcy. Despite its potential risks, we think Tesla is a wise choice for the future. As part of their brand principles, they have made quality and safety a priority, and we believe they will succeed. By the end of 2020, Tesla had $7.7 billion more in cash than debt, and by 2025, it is expected to have $24.6 billion in net cash. This is because, among other companies, automakers included, sales earnings and cash flow growth have been exceptionally impressive. The future is bright for Tesla, as the company plans to increase its deliveries from 500,000 in 2020 to over 4 million by 2026. Even if this is still around 60% less than what manufacturers like Volkswagen and Toyota are expected to offer, it still offers a growth rate of 41% annually and has the potential to greatly enrich early investors. It is predicted that Tesla will rank among the world's most lucrative automakers by 2031, owing to its steadily increasing average selling prices and constantly advancing economies of scale. Based on current data, Coin Price Forecast projects that Tesla stock will reach $2,500, or around 287% of its current trading price. What are the opinions of other investors? Generally speaking, diversification is advised by financial gurus, particularly when the bull market continues to ply new ground. Former Google employee Jason DeBolt took a different approach. Life wealth of common sense. Nonetheless, I'll never lose money because I invest diverse. At an average cost basis of $58 a share, DeBolt presently holds 14,850 Tesla shares. He purchased 2,500 shares in 2013 for $7.50 apiece. According to him, the batch is currently valued at $2.2 million. This company is just getting started, DeBolt said to Rampant. We might not see another Tesla in the next 50 years. In summary, there is no magic quantity of Tesla shares that one should purchase in order to become wealthy and retire. Everyone's experience varies depending on their upbringing, future way of life, and other factors. On the other hand, you could compute a customized number using the formulas we covered in the movie. Lastly, it's usually a good idea to make sure you're not putting all of your eggs in one basket. By adding Tesla to your portfolio, you might be able to benefit from the growth of other automakers and renewable energy companies. You should also invest your money in other sectors in which you do not hold equity, if your portfolio includes other automakers and renewable energy firms, to mitigate the influence of any one industry on your savings. At present, how many shares of Tesla do you own? By 2031, how many will you need to retire? Please leave a comment below.